Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to give a very brief preview of what I'm going to be talking about at the Metals Investor Forum in Vancouver next week, and a little bit of an update on Silver North Resources, the one company in my session, and Solitario has assays coming next week. So what were we going to look for there? And also something big happened to Perpetua Gold last week.
So what will you be talking about at the upcoming Metals Investor Forum in Vancouver, September 20th and 21st? And where exactly is it in Vancouver?
Okay, this year's Metals Investor Forum for September 21st and 21st is in Vancouver is being held at the Marriott Park Hotel, which is next to the casino and the big stadium. So not the usual location downtown at the Rosewood. And as a sign of the difficult market, there are not as many companies as usual. So the conference will be pretty much over by early Saturday afternoon. My session is in late morning on Saturday, and the theme will have two parts to it. One, the first half is going to be very dreary as I go through the list of all the obstacles that are threatening to kill the Canadian resource junior ecosystem. But the second half will talk about a vision that I think could potentially be adopted that changes the way the market thinks about the juniors. Now, one of the big problems now is because it takes so long between exploration results and get permits and so on, the market has developed this attitude for an exploration play that, okay, you get your shot, you drill your half dozen holes or whatever, and we want to see a world-class sniper kill shot. We talked about this last week with PJX Resources. As soon as you don't deliver a barn burner discovery hole, the market is gone, the stock collapses, and it just spins its wheel. Now, it is true that the odds of finding a world-class discovery early in an exploration play, especially a grassroots one with entirely new target, especially ones that are in the third dimension, like semi-blind underground targets, those odds are really, really poor. And part of what's killing this resource junior sector is this all-or-nothing lottery ticket type mentality. So if you come up with a deposit that's coherent, hangs together, you know what it is, you know what it takes to develop, but the cost is pretty much in line or even higher than the rock value, the recoverable and payable rock value of that deposit, it's game over. And very early in the exploration cycle, if you're not hitting out-of-the-park grades that make complete sense at the prevailing metal price, you're done. But what's changing in the world is this geopolitical conflict between global West and global East. And it is not going to dissolve and have everybody get along again. We are facing a cycle of deglobalization where parts of the world become inaccessible to other parts. For example, like the parts of Latin America are going to end up in the Chinese orbit, as is much of Asia. And of course, Russia will be aligned with China. We're hearing in the past couple of days that Kazatomprom is feeling pressure from China and Russia to allocate all of their uranium production, which is just under half of global production, to China and Asia, which would mean Europe and the United States are left scrambling. So if this process continues, and it will accelerate if things get hot, the global West nations are going to have a problem. Now, the other day I heard that China is going all in with fusion energy research. Now, what's happened over here in the global West is venture capital has started to invest in new technologies, and the whole AI computation revolution will help accelerate progress in this area. But if you have fusion energy, enormous R&D being sunk into it by the Chinese, they will march fusion energy across the commercialization finish line. Now, that probably isn't realistic until 2040, but that's only 15 years down the road. Now, if you achieve the energy fusion breakthrough, you can collapse the cost of energy by 90%. You cannot do that with any of the other existing energy resources, whether they be fossil fuels or renewables, because the materials for at least the renewables and that, they come from the cost of extracting metals from the ground and building these things. With regard to climate change, it's probably hopeless that we are going to be able to collectively do what's necessary to slow down the carbon dioxide loading of the atmosphere and keep the temperature from getting hotter and hotter. So adaptation to a new reality of super hot future, which means a lot more air conditioning, a lot more infrastructure to keep us cool, and of course the electricity to make this happen. So China is a huge coal burner. It's it's shifting to electric vehicles away from internal combustion engines because it has virtually no oil production, and it also doesn't even have any natural gas production to speak of. So it relies on coal and nuclear to power its energy grid. But China thinks in long-term terms, and it sees that what's the point of becoming the new hegemon displacing the United States if we can't cope in a planet that has overheated? So they've recognized that fusion energy is the key. And this is similar to the Manhattan Project of the 30s and 40s, when the Americans were racing against Nazi Germany to build a nuclear bomb. Now, this was a weapon of mass destruction. It was quite important to achieve this. Racing for fusion energy is not the same because it's all about preserving your nation, enabling it to survive in a much hotter climate and cut off from regular supplies of raw materials. So when the Americans and Europeans figure out that China is going into this fusion energy and could actually have it by 2040, they are also going to join in a Manhattan-style project to deliver this. And even if it doesn't matter who's successful, because with cyber surveillance, they're going to steal the secrets from each other. And it's not like these are secrets that are going to be able to harm each other. Now, this is important to the resource juniors because it means that if by 2040 we have this huge collapse in energy costs, that means the metal prices can stay where they are, but the cost of extraction drops. It's kind of the opposite of the Ross Beattie's aluminum model, where during the late 90s, he accumulated all these low-grade or medium-grade deposits in Latin America that didn't really work at the 60, 80 cent copper price at the time. But when China came along and helped increase the scale of the global economy by an order of magnitude, all of a sudden the metal prices, the real prices had to go up, and these deposits were dragged into the money. So what we're looking at is a future of 10 to 15 years from now where the deposits are not going to be dragged into the money by a higher metal price, but rather by a lower extraction cost, because energy is basically the key cost in almost every aspect of getting metal out of the ground. So what if we have a new financial engineering type thing where entities are created? They're not royalty companies. Royalty companies don't, and streaming companies, they don't control the source of their royalty revenues. What about companies that are deposit banks that simply monitor the system, and a junior, that finds a discovery, starts drilling it off, gets it to a PEA level. If it's good enough at the prices we have, it keeps going. If it isn't, well, then it's supposedly worthless. And you would see these companies as sleeper deposits just sitting there doing nothing for decades until suddenly things change. But now there could be a scenario where these deposit banks buy these companies, and they're not paying $1 billion. They're maybe paying only $50 to $100 million for a company that started off with a 10 million market cap. So all of a sudden, here's a potential exit strategy for what is deemed an economic failure. And there's been talk about the United States restarting its a reserve stockpiling system that it had going in the Cold War. But the problem with that is it distorts the market and just messes up everything for everybody. But this would be a way of encouraging the juniors to find these deposits, and then even though they fail to deliver a world-class discovery, get absorbed into these banks, and that creates liquidity, and these deposit banks can be invested in by all kinds of institutional entities, and it's a way of preparing for that future when fusion energy is suddenly a reality and the world is still carved up into its geopolitical east and west regions where you can only mine what's in your own jurisdiction. So this would be a huge boon for exploration in places like Canada and the United States, where you're probably looking for deposits that are underground and that, maybe they've got 0.4% copper. That's not good enough to block cave. But all of a sudden, if your cost has collapsed 80 to 90%, that is feasible. And then it's, of course, not big, giant open pit mine. And deeper underground is where you're going to find additional deposits. And some of them may be Oyu Tolgoi style that are high enough grade that you can mine underground. So I'm thinking if this type of paradigm shift in how to think about resource juniors gains common currency, we will have a bull market for the resource juniors, even if the metal prices trend up only modestly.
What is Silver North Resources working on right now?
Well, Silver North Resources is the only company in my Metals Investor Forum session. I did have Nevada Organic Phosphate as a company, but they discovered a couple of weeks ago that the person at the BLM in charge of shepherding the decision on the Murdoch Mountain lease permit application in northeastern Nevada, she's on vacation for 2 weeks. And if there isn't somebody nudging this along upstairs through the bureaucratic chain of the BLM, nothing will be done. And because they haven't been told what the decision is, they were in this predicament of, we're going to be spending a bunch of money at this show, talking about something that we talked about at the show in May, nothing different, and a week later, we could suddenly get a negative decision, and then we've wasted this money and wasted everybody's time. So they had to pull out. Now, Silver North Resources, it is Yukon focused, and of course, Yukon is all in turmoil right now after the heap leach pile collapse of Victoria Gold, which basically wiped out that company and stirred up the First Nations to be anti-mining, and it's a bit of uncertainty about the future of where things are going to go in the Yukon. But the Haldane project, which it owns 100%, is west of the Keno Hill operation that Alexco used to own, but which is now operated by Hecla. And Hecla is working on getting the high-grade zinc, lead, silver mineralization back up to a mining level that can feed the capacity of the mill. Haldane Mountain to the west is a little higher in the system. The erosion hasn't exposed the mineralization as well as it was at the Keno Hill area to the east. But the structures are there. High-grade zinc, lead, silver mineralization has been intersected, and there's only been about 28 holes historically drilled into this. Half of them by Silver North and its predecessors. Now, they had hoped to do a $2 million program this year, but the market has been so abysmal that they are only able to mount a 4-hole drill program, and they have started this program the past week. They will be drilling 2 or 3 holes through the west and main faults, and there the idea is to find these are like fault structures where there are jogs in it, and it's in the jogs that the high-grade mineralization, sometimes as high as 3,000 grams per ton silver, occur. Now, the density of drilling covers only like about 600 meters of a total 12-kilometer strike of these vein structures. And this is a bit of like, with only three holes, 2 to 3 holes, this is a bit of a sniper shot shooting, because if they're not lucky, they won't hit this thing. But one of the targets that they are drilling is the Bighorn target, where they drilled a hole into it in 2019, and it's off to the west. and they didn't get the high grade mineralization that they got on the main vein, but the context is such that you need to drill more holes. So they're going in there more to gain additional geology about how that works, but that could actually deliver a whole new focus for the Haldane project. So it's unlikely that they're going to get some barn burner results that take the stock to the moon, but their goal isn't to deliver a world-class discovery. Their goal is to delineate 30 million ounces of silver, which Hecla will buy them out so that they can just mine it and underground and truck it to their mill at Keno Hill. Now, the other thing happening with Silver North is their Tim project, which is in the southern part of Yukon, just north of the border with British Columbia. Its partner is Coeur Mining. It can earn up to 80%, but right now it's only earning 51%. And given the headaches with permitting and consultations and all that, them completing a feasibility study on whatever is there, by 2028, there is zero chance of that. So that deal is going to have to be renegotiated some way, or they end up stuck at 51% after spending the initial amount of money. Now, the story there is Coeur started drilling earlier in the year and has completed 6 holes on the Tim target. Now, this was trenched and had a few holes in it in the past, and it is regarded as a carbonate replacement style system similar to the Silvertip mine that Coeur is operating on the BC side of the border. And they have reported the visual descriptions for this, but for these 6 holes. But from the visuals, it's not obvious that they have barn burner. We have a big winner. But it is clear that, yes, it is a CRD system. It persists over a 2-kilometer strike. This initial program, its purpose is not so much to send the stock to the moon, but to convince Coeur that next year we go in there with an expanded program to start drilling off and finding out how all this zinc, lead, silver mineralization hangs together. So that's the story for Silver North Resources. Not a huge market capitalization in the Yukon with 2 plays that are going to be flowing results over the next couple of months.
John, Solitario has indicated it'll release the first assays from its Golden Crest project on Monday. What should we be looking for?
Well, everybody was mumbling today. They just put out a very brief press release that they're going to be at the Denver Gold Show on Monday, and in the afternoon after the markets close, they're going to do a webcast where they're going to discuss the results of the first 3 holes. And everybody's sort of thinking, why haven't you published them already? And why are you promising to publish to talk about these results unless you know that they are good? And the stock has moved up because the market suspects, well, they probably have something good to tell us. Now, I managed to get hold of Chris Harold and got some clarity on this. They started drilling in mid-July, and they are now on the 6th hole. The first 3 holes were all drilled on the downpour target, and that's where they've got some really juicy gold grades on surface. The mineralization is such that you cannot visually tell what the gold content is. And, because they'll obviously be drilling underneath where they have the values at surface, they will get some gold in the results. Now, apparently they've received 2 holes and are just waiting by their inbox for the last hole so they can put it all together. Friday's not a great day to put out results because the market immediately assumes they're garbage. So I expect that Monday morning before the open, we will get the first batch of assays. Now, again, the market's mentality is sniper kill shot. We want the confirmation of a world-class hole. That probably is not going to happen because they know nothing about the 3rd dimension. They have their theories about what the layer cake looks like and the sequence, but they do not know where transitions, and they do not know where these structures are. And yes, by sampling on a grid, you can sort of infer, here's a high-grade trend. There must be a structure right there, but that may not be the case. You may not know what angle it dips at. So they fanned 3 holes from this pad and are busy logging it, and they're learning a lot about the stratigraphy and the geology. And Chris said, a major part of our presentation on Monday will be our evolving understanding of the geology of Golden Crest, which is a 33,000 acre project, which is very target rich. Now, because they can't tell what the gold assays are going to be until they have the assays, which take 6 to 8 weeks, they've taken the drill and started punching holes at other targets. They drilled one 500 meters to the north, which puts it close to the Wild Rose, which seems to be part of the downpour trend. Most of Wild Rose, however, is outside the current plan of operations. It's in the second one that they have applied for, that's pending. But whatever they get there, it'll help them understand maybe if there is a structural trend, how does it behave to the north of the downpour area? And they've drilled one other target that he didn't really mention where, but he also mentioned they were drilling the high-risk target, and they're drilling this now. This is hole 6. This is what they call the Mirage target, and it is called high-risk because there's very little gold on surface, but there's an awful lot of arsenic. Plus, when they did a IP survey, they could see an IP anomaly about 300 to 400 meters down, would be 400 meters would be the Precambrian basement that hosts the Homestake type deposit, but the Deadwood Formation sits on top of it, and that hosts the Wharf system, which is also a 10 million ounce system. So they're drilling a deep hole into this. This will give them a lot of information about how the stratigraphy behaves in this area, and if the IP is indicative of sulfides that have been gold enriched, well, that could be one hell of a discovery hole. So this is a story that you cannot kill with this program. You cannot tell from any of the holes what you're hitting. You learn a lot of geology. You then match the assays with it, and then you start to vector in on where you think the big replacement style deposits that they are looking for, where the fluids have come up the structures, hit a lithological change where the next horizon is a tighter rock, so the fluids bleed sideways. Very similar to how the Carlin type deposits form when you have a crackled limestone just beneath a shale cap, and then it goes sideways and forms those rich deposits. Interestingly, this is also micron-sized gold, similar to Carlin. Anyways, we'll find out Monday what they got. Maybe they got lucky. One shouldn't count on it, but this is a story that I think this news release, the market will embrace, especially since we have gold now perking up once again. It's back above $2,500.
What's the big news for Perpetua Gold Corp?
On Friday, September 6th, the U.S. Forest Service published the final environmental impact statement for the Stibnite project in Idaho and issued a draft record of decision. This is a major step because this means that by the end of the year, we should have the final record of decision, which would allow them to start construction, assuming they have the money. Now, it's a big deal because on September 15th, China is introducing export controls on antimony, which is an industrial metal used in bullet casings, used in fire retardants. It's somewhat of a war type metal. And China's supply of this, it used to dominate, but it has been declining because of depletion of its key deposits. Now, most of the rest of the world, like Russia, it comes from as a byproduct of gold mining. And the stibnite is really a gold mine with a relatively minor antimony byproduct. Yet once this is in production, this would deliver about a third of what the United States consumes annually. So now we have this problem that I was talking about earlier today, where we've relied on a globalized economy to deliver us the metals we need, and the price will be whatever the aggregate demand prices it as. Now we have a situation where artificially we can't get these metals anymore. So I think the United States, the U.S. Forest Service, which has turned this into some sort of perpetual permitting make-work program for poor bureaucrats, finally woke up and said, enough. This needs to be built, and it needs to be built pronto. And they've even extended the promise of $1 billion loan for this project. Now, big question is, the feasibility study was done in 2020, and we know it's stale. And a couple of weeks ago, I did an outcome or updated the DCF model using 40% CapEx and OpEx escalation, and it still works at the current metal prices. And if gold goes through 3,000 without significant additional inflation, then this thing really starts to sing. But so I asked the company, well, when will you update your feasibility study? Because you've obviously made changes, and of course the cost of everything has changed. So I've been told at the end of this year, probably in conjunction with the final record of decision, there will be an updated feasibility study. And it's been suggested to me that my 40% cost escalation assumption is not unreasonable. So it's probably, I'm going to include with the comment that goes with this podcast, updated numbers, these DCF showing what happens at the different prices. By the way, antimony in the past week has soared to $13 a pound. That is an all-time high and probably will get worse. And of course, the market now, everybody's scrambling. Oh, antimony is the new hot metal. Last year's 83,000 tons of production, it was worth $1 billion, which is not very much at the $5.50 average price. It would be worth about $2.5 billion at today's price. But this idea of looking for an antimony play, that's a bunch of BS. If you have an advanced project or you're an existing producer, you're going to get a little bit of attention because you have an antimony byproduct, and suddenly all the powers that be are going to be very happy that they have a gold mine in their jurisdiction that's also producing this metal that's suddenly not going to be as readily available as it used to be. So beware of these guys pumping antimony plays. If you do want to have antimony as part of your portfolio, I recommend looking at Endurance Gold, whose Reliance project in southwestern British Columbia is the focus of a big drill program right now. There, the goal is to demonstrate that this orogenic gold system has lots of high-grade gold, get into the 3 to 4 million ounce category, similar to Braylon. But because they are much higher in the system than Braylon, they also have antimony as part of the mineralization. The company doesn't talk about it because it knows that without proving there's the gold deposit worth mining, the antimony doesn't mean anything. But it's there, and of course, just buying Endurance Gold for the gold discovery upside, building on what they've already demonstrated, that makes sense. So having the antimony as part of the story makes you feel better, go for it.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.